What is up, everybody? Logan here again with another video. I hope you guys are having a fantastic weekend right now, as it is Good Friday today. It's Easter weekend. Enjoy the time with the family. As you guys already know, I just want to say that. If you guys want to check out the links in the description to join the Discord, if you guys want to check out my music, you can check those out down there. Make sure you leave a like on this video, and let's hop right into this one. I've just been having a blast trading these. Now, there's a lot of risk that goes into them. I'll talk about the parameters in this video. We'll go over my rules on the 29th. In about 30 minutes, I achieved 120 bucks on this, which is a 61% return. We'll go over the strikes, my mindset, picking the direction, and then also just profiting. We'll go over stop losses and all that. So let's hop right into this video. I'm super excited for this one. I also wanted to give a big shout out to Halcyon Trader for his last trade in this diagonal on SPX. We made the video on Tuesday, and we actually filled those at a 180% profit. It's so funny because if we would have just held the trade to the end of the day, it was up like 600% or something absolutely ridiculous, because we closed the day at 40.20 on the SPX, which nobody expected. I didn't even expect it. I truly thought we would just get shut right back down, and at the end of the day, it just continued to rip. So I just think that's fantastic. So shout out Halcyon for that play. Now I want to start with my rules first off, so we can go over those. These are the rules that I've kind of shaped over the last month of testing these plays that fit my trading style the best. So if we start with the first one, so I say wait until 9:45 to consider taking a position, as we need the market to shake out and we can be less worried about fake breakouts. There's a lot of action in the first 15 minutes of the market, and I like to wait until we have a clear direction of what's going on. It's not uncommon to see the market fall from 9:30 to 9:45, and then that point become the lowest point of the day, right? You wouldn't want to jump in right away because you're going to see a lot of volatility in the first 15 minutes, in my opinion. My second rule is take profits at 50% of the credit received. So if you receive $15 per position that you opened, I would say take profit at $7 or $8, right? Now, I found that receiving 50% and then taking the trade off the table is the best way, because if you're able to achieve 50% in like 20 minutes, 30 minutes, maybe an hour, you can set yourself up for another trade later in the day. And that's kind of my goal here, right? I don't want to just open one and then have to watch it like a hawk for the rest of the day. Especially if I open this at 11, just to watch it to make a couple more dollars, to me isn't worth it. I'd much rather reset and look for a new play, look for a better setup. Then look at the stop loss is 3 times the credit received. Now this is $15 received per position, so I'd be stopped out at $45 per contract on these positions, so I'd lose about $30 per contract, because 45 minus 15, and I'm totally cool with that. Considering the probabilities that I'm playing at, I'm totally cool with taking that, and I would take myself out with a market order because I'm going to be watching this live, right? It's not going to be I'm setting a stop loss and then walking away from it. So it's more of like you're actively watching this position, trying to achieve your 50%, and then hopping out of the play with a limit order on whatever your take profit point is, which for me is 50% on the credit. Try to get out by noon. Now take this one with a grain of salt. Now I kind of made this for if you're trading in the morning. I think it's best to just get out by noon, even if you're at break even again and you entered at 10, because our whole goal, right, is to achieve 50% within an hour or so is my goal with these, right? So that's where I'm kind of looking at this from, is get out by noon is just saying like, hey, if you're in that trade, because we also know with 0 days to expiration plays that if you're still in a trade and it's like 2 p.m. or if you're looking for a new one, the premiums are so small that it's really hard to find something that you're comfortable with. And then of course you're gonna have to deal with the margin closing, right? TOS can close you early on days of expiration around 3 p.m. Robinhood, a lot of brokers do that where they'll close your margin plays early if you're holding something that's close to being in the money near expiration, and they do that to protect you as a trader. Then we go to number 5. Now the VIX is very important in these situations for the runway that you're looking at, right? A higher VIX will give you better premium, of course, but you're gonna have more volatility. And I prefer, honestly, a higher VIX. I like 23%, or 23%. I like a $23 VIX for these, even 20. I don't mind 17. It makes it easy, right? Because you don't expect craziness to happen, especially when you're watching the 1-minute candles. But I actually had a really good time trading. One week I put up 3,000 in Iron Condor and walked away with about 220 on my $3,000 investment in that day. And the VIX was really high that day. And that netted a really good 7.5% return, I think that is, or 7, No, just over 7. I think it was like 7.1%. Now, I ran some on SPX yesterday, which was Friday, April 1st, which is April Fool's Day. And you guys can see here that I filled 4 of them at 11.53. It was a $5 spread, so that made me put up $2,000 in collateral, and I received a credit of 35 per position, which is about 7% right there in premium, right? So I received 7% on my investment, and I sold those back 26 minutes later for 25, which wasn't 50%, I was at 30%, but the market had continued to just trend sideways. We were already up like 1.5% on the day. So I decided to take it off the table, and I was like, it's still not the best, but I did bring in $40, but not really, right? TOS charges commissions, and they charge commissions when you open and close positions. So if we actually go to my positions page, I started this account with $5 grand a few days ago. I only walked away with $21.17. I paid $19 in commissions. I have to negotiate with TOS. I need to get these down, or I'll just move over to Tasty Trades and get a smaller commission. But that's kind of where, yeah, it says I made 40, but oh my gosh, I got into a trade that if I would have just let expire, would have made 7% on the day, and I only walked away with 1%. Because after fees and commissions, it would have been 2%, right? If I would have continued to hold. I got 30% of my credit received on that play. I was very happy with it, and I was able to buy after we dipped quite a bit. And I have a lot of indicators on TOS that I use for these, a lot of my squeezes. That's a lot of my private information for trading, but it really helped me here, and I'm gonna continue to test this out. Now, that was the play that I called out to the Discord on my SPY position on Robinhood, where I ran the 390, 388, 0 days to expiration put credit spread. So I put up $200 per contract, received 11 credit. I held these for about 30 minutes. That was the first play that I had shown. These were at 11 here. I actually got them to fill at 12, which I was really surprised at because Robinhood usually never does that for me. That's the other thing about TOS, is I was able to get in and out of my positions like ASAP. Robinhood, and if you're trading SPY, in my experience, has been harder to fill and get out of positions. It just seems more practical on SPX for my trading. So like I said, my stop loss is the 3 times the credit received. Then I put the sell in order at 5. We were sitting at 6, and we had sat at 6 for probably 10 minutes of that trade. So then I wanted to let everybody know that 6 is a great fill as well. And then I filled at 5, I let everybody know, and then it was actually worthless within the next, I would say, hour and a half because the market started to rip even more. And that's where it does kind of stink when it's like, oh, I could have, I could have made more, right? I closed them at 5, I could have made more, right? But at the same time, I left 75 bucks on the table, but I'd already received my 120. I wanted to get out of that trade and move on because in about 30 minutes, making 120 bucks is awesome, in my opinion. I mean, money's relative to the beholder, so maybe you guys don't think that's awesome. Tony Robbins could care less about $120 in 35 minutes, but I think like the average person. Now that is one of the funky things about Robinhood is I was filling these contracts oddly at like 5 contracts at a time on SPY for like, here you guys can see 12 credit right here. And of course it let me sell all of them at the same time, but their fills are just so hard to get into. I filled these at 11.24. And then if we look at where I took profits, where I said at 5, they filled all 15 of them at 12.02. So I was really happy with that. I think it went very smooth. That was a 40 or 38 minute trade on that. Those are some of the contracts filling. This was me selling all 15 of them. And the main reason I want to trade SPX instead of SPY is right here under section 1256 of the tax code. Profit and loss on transactions and certain exchange traded options, including SPX, are entitled to be taxed at a rate equal to 60% long-term and 40% short-term capital gains. That's huge. Most traders who trade anything else, right, deal with 100% short-term capital gains. This is 60% long-term and 40% of your gains are taxed at short-term. That can make a big difference as a trader. So I would say trading these on SPX definitely has its advantages, right, instead of doing it on SPY. And this is one of the main reasons. The other ones I would say is I like that $5 spread because you're gonna get better premium. And the higher the premium is that you received, the more it's gonna move around on you, right? So in my opinion, I would prefer that because that thing can get crushed from 40 to 20 like it's nothing. But if you are to fill like a SPY like I did, and you fill something at 4, the chances that goes from 4 to 2, by the end of the day with however your spread width is, that can work against you. So I think it's better to have a higher premium and watch it get crushed on you. Now let me show you guys how I'd fill this on SPY because TOS doesn't allow you to trade SPX on the mobile version. I tried it and it says it cannot be traded. So on the TOS version, I'll have to run a paper trading simulator and do on demand with you. Or I could even show a trade live if you guys would like to see that in a future video on TOS, as that's what I'm gonna mainly focus on. But I'm gonna run SPY for the video demonstration for anybody who's interested in just running it on SPY, which is quite a bit of people. I've gotten a lot of DMs on, hey, can you just run this on SPY? So if we look down here, my thought process, right, is if we're playing in between the 10 to 15 delta, 396 put, so I would just sell that and I would buy a different put that I like. I think that's good premium right there. 200 bucks to make 13 credit. I would fill as much of those as I'm comfortable with. Currently, I'm comfortable with anywhere up to 5,000 in a play. And the reason that is because between both my accounts, my Robinhood and my TOS, I have about 50 grand. So that's still less than 10% of my capital that I have in the market, or right around 10%. So I'm comfortable with that, right? It's not like I'm putting my whole account into one 0-day to expiration trade. That can be very risky. And I would not want to do that and put myself at that level of stress, because my goal as a trader is to make income. It's to make money. It's not to get rich overnight or get rich in an hour. My whole goal is to build systems. That's why we do the covered calls. That's why we sell cash secured puts. That's why we do credit spreads. That's why we do 0 days to expiration, calendars, everything, right? It's because we set the systems that we know best, and it's fun to experiment. I think it's great to push yourself as a trader and find what makes you emotional. Maybe this is still too scary for you, having only $5 worth of runway. If you're in with $1,000 and you got 5 of these guys and you get a 13 credit and then you get stopped out at 39, which is a $26 loss, and you got 5 of them, just do 26 times 5. 120, that's like 130. That's not the end of the world, right? 26 times 5 was 130 bucks. But if you're in with 10,000 and you only have like $12,000 to your name, and you're like, oh my gosh, this is, you know, I found out this new way to make money, 0 days expiration, and it blows past your stop because you're already in too much, you're in with too much money, and then you start to get emotional, and then you can't move on from this trade, and you're just watching it lose money, and now you're getting emotional, freaking out. Oh my gosh, just please come up, and it just gets worse. That's where you're gonna get hurt as a trader trading these style of plays. I'll have to do a video on TOS soon on these and show you guys how to execute orders there, because I execute all of these via my desktop app on TOS, because I think the mobile app's very hard to use in general, but also you can trade SPX on the desktop one. You can create alerts for price action, where you wanna enter trades. I think it's just a really nice platform to trade with. But just coming from the mindset of a trader with this style of trading, don't get too caught up in seeing so many people making so much money on all these different strategies and all of a sudden you're trying everything. I think it's very important to find what works best for you and just keep, you know, testing, refining, seeing what makes you comfortable, getting outside of your comfort zone. But you just don't want to be the person who's constantly chasing things because, you know, you heard someone made so much money on this certain stock, you know, and like the other pump and dumps or whatever. In my opinion, I think if you find a couple strategies that you like the best, stick to them and shoot for your goal every week or every month, whatever your goal is. For your account, my goal is weekly income. For other people, it's account growth. Stick to your goal, stick to your guts, stick to the amount of money you would like to receive a week off the market, and then, you know, just get comfortable, size inappropriately to hit your goal. I wouldn't personally just put money into a play because other people have made money previously doing that exact one, right? It's just like the Tesla call paradox is what I like to think about it. Just because someone made tons of money off Tesla calls all throughout last year, if they had started doing Tesla calls again in January, it would not be working out for them so far this year. You have to adapt your trading. So I think it's important to test, find what works best for you, and then stick to your guns and hit your weekly goals that way. Now that's a little spiel, you don't even have to listen to me on that, but as far as me being a trader, me finding success in it, and it's mainly because of sticking to what I'm comfortable with, doing it consistently every single week, every 2 weeks, and just having a consistent way to attack the market. You can attack it from different angles, and I slowly continue to push myself as a trader just so it doesn't get boring. And also, if you can size up, perfect. Find what makes you emotional so you know how to attack the market, and you can, you know, take every trade with a grain of salt, knowing that, hey, if this doesn't work out, I can get out. This is the spot where I'm getting in. This is the spot where I'm getting out, whether it works out or it doesn't for you. And just having goals like that, right, can really help you become a good trader. And you know how it is, the more and more success that we achieve, the more confident we become. So most traders take their biggest loss after long streaks of winning, and that's something that Halcyon told me, and I really think about that every single day that I wake up to trade. So that's gonna be everything for me. I hope this video helped you guys a little bit. This is like the beginner's part. For someone who's never traded 0 days to expiration and wants to try it on different funds, this is the video for them. So I hope you guys have a fantastic weekend. I will talk to you guys on Monday. We'll have more videos coming out this weekend. Enjoy your Easter, and we will chat soon.